I want to bring in Belpointe Chief Strategist David Nelson. David, let me talk to you about this, right? Because let's start with what's happening here. The great rotation has finally begun.
Yep.
It happened with little fanfare, as it always does, but now we look now. Third quarter, healthcare by far killing it. Consumer staples, so it's begun. What does it mean for you?
It started around Halloween, and if coming into this week, the spread between healthcare and technology in just a couple of weeks, 1,600 basis points, that's not just a reversion to the mean. That's a wake-up call, and it's one that your portfolio should reflect.
All right, so cyclical stocks right now, are improving big time, right? We're going to bring up a chart for this in a moment here. And so when you see cyclical names moving, these industries, right, whether it's financial services, healthcare, real estate, consumer defensive, what does that tell you about the economy? Because this does not scream recession to me.
It does not scream recession. It is not a recession. It's the glass is half full again. The market is broadening out, and I think that's good. That's how you get an extended market cycle. If we just keep crowding into the same names and not understanding that the AI trade is not a technology story anymore. It is an everything story. Every part of the industrial complex, every part of healthcare, everything is using it. I'm using it, you're using it, your family's using it.
But David, you do say that, okay, the economy is fine. I mean, we're not going to go into recession, but consumers have become more selective. In fact, you talk about the lipstick index. What's that?
Well, the lipstick index, it's really, maybe there are some challenges out there. We can't easily go out and get a home. Interest rates are too high. But we can spend money, and they're doing that. You're showing up in the stores. You're seeing the retail numbers this week. You're seeing some stocks really blow it out. The setup was perfect because expectations were low and short interest was high.
I think Kohl's up 40%, Abercrombie up 30%. This morning, Urban Outfitters up. But the other side of this, the folks who've been spending and keep spending are the rich folks, right? We got the beige book out just about at the top of the show. And one thing they talk about is that higher end keeps spending and spending and spending. And that takes me to a stock that you like here. You like Ralph Lauren here.
I do. I've always liked this stock. When I go into the mall, this is the area that has the lines. They just had another fabulous quarter. We've owned this for a while. Margins are expanding, and the direct-to-consumer is off the charts right now.
Other picks, let's talk about some of the other stocks that you like here. You've got Lilly. It seems like everyone kind of likes Lilly these days.
It's the next one for the Magnificent Seven, and everybody thought you were chasing it because it's $1 trillion market cap. They said the same thing when Nvidia hit $1 trillion.
Right. I remember I had guests who said it's hard for a company to go from $1 trillion to $2 trillion. How about $1 trillion to $4 trillion or $5 trillion? You also like Hood. Full disclosure, I got out of Hood a little early. We made huge profits. I had subscribers get back in. I want to ask you about Monster. There was a time when over the past 25, 30 years, this was the #1 performer of them all. And I just hadn't heard anything about it in a while.
I think it's maybe 131,000%, some ridiculous number. If this was a technology stock, they would call it cheap. This is when they're selling a legal drug, all right? For some, it's coffee. For many, it's energy drinks. The margins are very tech-like.
Right.
If you got to own something in consumer staples, this is a growth name. You have to be there.
Great stuff, my man.
Thank you.
Good seeing you as always. Love your optimism. Happy Thanksgiving.